Today, we're diving into what could be one of the most impactful moves in Pi network history and why this massive withdrawal might be a game changer for the future of the Pi token. Let's get straight to the core of the news. On May 21st, more than 86 million Pi tokens were pulled out of OKX exchange, all within just a few hours. According to PiNext.gen on X, formerly Twitter, this wasn't just a few whales moving funds. Blockchain data confirms that these tokens were withdrawn in quick succession, leaving only 21 million Pi tokens behind on the platform. Now, why does that matter? When tokens are pulled off exchanges in large volumes, it typically signals a supply shock. Less supply means fewer tokens available to trade, and if demand stays high or even grows, we usually see price spikes. That's exactly what happened here. The Pi token jumped 11.4% in 24 hours, reaching $0.8268, a significant spike following the news. To really understand where this is going, let's zoom out and look at Pi's performance in May. Early May, Pi was trading at $0.6141. May 8th, a breakout pushed the token up 10.66%. By May 13th, Pi skyrocketed with gains of over 112%. But from May 14th to May 17th, a correction wiped out nearly 44%. Since May 18th, Pi has started climbing again, now up 19.6%, with most of that happening in just the last 24 hours. Volatile? Absolutely. But that's expected in emerging crypto ecosystems. The key is why these movements happen, and it's not just about price action. What's fueling this bullish comeback? Part of the answer lies in what happened at Consensus 2025. Pi Network's founder and CTO, Dr. Nicholas Kokolas, gave a powerful keynote highlighting the role of AI and blockchain integration, and how Pi Network is positioning itself at that intersection. This announcement reignited community optimism. It gave fresh momentum to the project and renewed interest in what Pi could become. This optimism, combined with the massive OKX withdrawal, paints a picture of growing investor confidence, maybe even preparation for a bigger move. But not everyone is cheering. In the middle of this rally, controversy broke out. Several users began alleging that the Pi core team sold off 50 million Pi tokens shortly after the Consensus event, sparking fears of insider selling and hidden manipulation. These are serious claims and they're dividing the community. So what's the truth? According to DAO World, a prominent Pi supporter, these claims don't add up. He confirmed that only about 9.99 million tokens were moved between February 27 and March 4, and even if some were sold, that's a tiny fraction of the total supply, which stands at 7.17 billion tokens. World insists these moves align with the project's official tokenomics and white paper. Still, the drama reveals something important: the community wants transparency. And rightly so. In decentralized ecosystems, trust and clarity are everything. Let's not forget, this isn't the first time we've seen wild action in the Pi markets. Back in late February, the token saw a ridiculous 2,721.9% surge, followed by a 40.93% crash within days. What caused the drop? Massive token transfers. Again. This cycle of sudden rallies followed by sharp corrections has created a pattern. Market moves often coincide with internal token management. It raises questions: is this just early stage volatility, or is something deeper going on? Either way, it reminds us that crypto markets aren't just about technology. They're also about perception, control, and community reaction. So, what does this all mean moving forward? If Pi Network wants to lead the next wave of crypto adoption, they need to double down on communication, clarity, and consistent delivery. The good news? The technology's there. The AI plus blockchain vision is compelling. The community is engaged. Now it's about execution. Look, Pi Network is at a crossroads. If the leadership plays this right, we could see Pi break through resistance and reach new highs. But if doubts continue to grow around transparency and token management, the momentum could fade fast. What do you think? Was the 86 million token move bullish or suspicious? Let me know in the comments. If you found this breakdown helpful, give this video a like and subscribe. Remember, in crypto, timing and information make all the difference. This video is for informational purposes only and does not constitute financial advice. Cryptocurrency investments are highly volatile and carry significant risk. Always do your own research and consult a licensed financial advisor before making investment decisions.